Okay, this is a quick video on short selling, basic stuff. What is a short sale, and when's the best time to put it on, or where do you put it on? On this stock here, I've got up NNOX. This is the daily chart, but the pattern is the same on a intraday as well. We see that, and this is a well. Let's first start with what is a short sale. It's very simple. There's two sides to a trade. There's a buy and there's a sell. And it doesn't matter which one you do first. If you buy a stock, you're going long, with eventually the view of selling it at a higher price. If you short sell, then you sell the stock first, with a view of buying it back at a lower price. And the reason you can short sell is, well, first of all, you have to locate the stock. So sometimes in your brokerage firm that you're dealing with, if somebody in that brokerage firm is long the stock, the broker has the right, unless the client specifically says, I don't want you to lend my stock out, the broker has the right to lend that stock out to anybody that wants to borrow it. Because when you do a trade, a buy or a sell, you have 2 business days to settle. I can't remember if it's 2 or 3. It used to be 3, but I think they shortened it. Doesn't matter. You have to settle the trade. So if you sell the stock, you have to deliver the certificate to the buyer. I mean, it's all electronic, of course. And if you buy the stock, you have to deliver the money to the seller. So after 2 or 3 days, if you've sold the stock short, you have to deliver that certificate to the buyer. So if you don't have it to deliver, one of two things happens. The broker either buys you back in, or you find some place to borrow it from somebody for a fee, and you give it to the person that bought the stock. And now you have to replace the stock that you borrowed. And so eventually you want to buy the stock back and give the person back the stock that you borrowed from. And as I say, the broker charges a fee for the right to borrow their stock out of their inventory. So buy is long, sell is short. If you do a buy first, you're going long. If you sell first, you're going short. So when is the best time to short? Well, this is one of the big mistakes that new traders make. And we saw that today in the trading room. Somebody asked, is this a good time to short? Not this stock, a different one. New traders quite often just sell the stock because it's up. They see guys making huge now. There are traders that are very good at it, and that's all they do is short sale, and they make huge money. You see them posted on the internet, and they've got big books, and they've got lots of experience. But one of the biggest mistakes, but you also see where they take their big hits is because they shorted and it went against them. They got squeezed out. One of the big mistakes that new traders make is they just short a stock because it's up. And mostly young men, full of testosterone, think they know what they're doing. They whack the stock and they get killed. Look at this stock here. This is the NNOX. Let's say that you had this started to go and you shorted it in here and it goes against you. It did come back sharply, but look at how it moved here from, depending where you short, from $30 to $66. $36 against you if you had gone short and tried to ride it out. Institutions with huge books can ride it out, and they just keep selling all the way up because they know eventually it's going to come down. But as mere mortals, the market has a lot more time than you have money, and you'd get stopped out or get bought back in, or your margin calls, and you short again. Then we get this big spike up. And then the next day we get a reversal, and then the next day is down. Now this is what's called the front side of the move, and this is the back side of the move. If you're going to short stocks, you want to look to short them on the back side of the move. In Tyler's soliloquy, it was there's the pump and then the dump. Here's the pump, here's the dump, and then there's then whatever third one was, I can't remember. But then you get the fade, and this is your fade. And that's the best place to short, the back side of the move, not the front side. You get killed if you try to short the front side, especially on stocks like this. But on the back side, you're good. And I just stay short and keep with it. The one that we were trading, we saw today, CRDF, one of the members said, what's in here where it's breaking out, what's a good price to short this? There is no good price to short this. This is the front side of the move. Look how powerful this is. Why do you want to trade against that? You want to wait till you get the signal that says, okay, to short. So we get this tops up in here, pulls back. This is a bear flag now breaking down. Now you can look to short the pops on this. Maybe, here where it double top, came back best they could do, pulled back, held support. Double top, there's your short. You can go short, and then you see you've got this long candle, and the next candle's red. You can go short there. Now this is the back side of the move. This is intraday, but you can imagine if this was a daily chart, same thing. This is the back side of the move. It's going to break down and go lower. Now we don't know how far it's going to go, and the thing about shorting a stock that's very strong like this, sometimes it's muted, the downside. You have to get a move like this, $40, to get a big retracement. Stock that moves up 50 cents or so in a strong market. I mean, it may not come back, 10, 20 cents or 30 cents, hardly worth trading. So the folly is that people will start to short this stock at 8 here because it's a strong stock, but it failed at 8, got it back up there. They're all over as the shorts and think this is going to end. Pops through it, they get squeezed, and then they keep shorting all the way up. They keep getting squeezed until finally it gets up to the 11. Then the pros come in. They're not shorting the front side. They're looking to short the back side. They see it back off. They short the bounces now. And then they take it lower. Sure, they didn't get off their stock at the 11, but they got it off at 10.5. But at least they know they're on the right side of the trade, not the back side of the trade, or not the front side of the trade. So that's just a couple of ideas on short selling.